Two traders walk into the same market. Same charts. Same coins. Same conditions. One of them opens their trading app and starts looking around. Scanning different coins. Watching what is moving. Feeling out the market. Waiting for something to catch their eye. The other opens a document. Checks their watch list. Reviews their setup criteria. Identifies one trade that matches their system exactly. Places it. Sets their stop loss and take profit. Closes the app. 3 months later, the first trader has an account that looks like a roller coaster. Up big. Down bigger. Inconsistent. Emotional. Exhausting. The second trader has a steady upward curve. Not dramatic. Not overnight riches. Just consistent. Controlled. Growing. The difference between them is not talent. Not luck. Not a better signal group. It is a strategy. A personal system. Built around their own risk tolerance, their own schedule, their own goals. And today, I am going to help you build yours. And at the end of this video, I am going to give you a complete strategy template. Every section. Every question you need to answer. So that by the time you close this video, you have the foundation of your own personal crypto trading strategy already written down. Stay with me. Here is the biggest mistake most beginners make when they start trading. They look for someone else's strategy to copy. They find a YouTube video. Someone showing incredible results with a specific indicator combination. They copy it exactly. They apply it to their own trading. And it does not work. Not because the strategy is bad, but because every strategy was built by a specific person, for their specific risk tolerance, their specific trading hours, their specific account size, and their specific emotional makeup. A strategy built for a full-time trader who watches charts for 8 hours a day will not work for someone who checks their phone for 20 minutes during a lunch break. A strategy built for someone comfortable risking 5% per trade will destroy the account of someone who loses sleep over 1% drawdown. Your strategy has to fit you, not someone else. You. Every complete trading strategy, regardless of how simple or complex, contains 5 core elements. Element 1. Your trading style. Element 2. Your market and time frame. Element 3. Your entry criteria. Element 4. Your risk management rules. Element 5. Your exit plan. Get all 5 right, and you have a complete system. Miss any one of them, and you have a gambling habit dressed up as a strategy. Let us go through each one. Element 1. Your trading style. There are 3 main trading styles. And choosing the right one for your life is the foundation of everything. Scalping. This involves opening and closing multiple trades within minutes or hours. Capturing small price movements many times per day. This requires constant screen time. High focus. Fast decision making. It is intense. Not suitable for most beginners or people with full-time jobs. Swing trading. This involves holding trades for days or weeks, capturing larger price moves. You check your charts once or twice a day. You do not need to watch screens constantly. This is the most beginner-friendly trading style and works well around a regular schedule. Position trading. This involves holding trades for weeks or months. Very few trades per year. Very low time commitment. But requires strong conviction and patience. For most beginners watching this video, swing trading is the recommended starting point. Low stress. Manageable time commitment. And still very profitable when done correctly. Element 2. Your market and time frame. Which coins are you going to focus on? Beginners should start with the top 2, Bitcoin and Ethereum. They are the most liquid, the most predictable, and the least likely to be manipulated by small groups of traders. As you grow more experienced, you can expand to other large cap coins. But start focused. Trying to follow 50 coins at once is a recipe for confusion and missed opportunities. Now, time frame. This refers to the candle size on your chart. A 1-hour chart shows you 1 candle per hour. A 4-hour chart shows one candle every 4 hours. A daily chart shows one candle per day. For swing trading, the 4-hour and daily charts are your primary tools. They filter out the noise of short-term price movements and show you the bigger picture clearly. Element 3. Your entry criteria. This is the specific set of conditions that must be met before you place any trade. Not feelings. Not gut instinct. Specific. Measurable. Repeatable conditions. A simple entry criteria example for a beginner swing trader might look like this. Condition 1. Bitcoin is trading above its 50-day moving average. This tells me the overall trend is bullish. Condition 2. The price has pulled back to a key support level after a recent push higher. This gives me a better entry price with lower risk. Condition 3. A bullish candle pattern has formed at that support level, confirming buyers are stepping in. All three conditions must be present. If even one is missing, no trade. This discipline alone will keep you out of most bad trades. Your entry criteria does not need to be complex. It needs to be clear. And it needs to be followed consistently. Element 4. Risk management rules. We covered this in video 2 of level 3. But now we are building it directly into your strategy document. Your risk management rules must answer 4 specific questions. How much of my account am I risking per trade? Answer: 1 to 2% maximum. Where is my stop loss placed on every trade? Answer: below the nearest key support level. What is my minimum risk to reward ratio? Answer: 1 to 2 minimum. For every dollar I risk, I must have the potential to make at least $2. How many trades will I have open at the same time? Answer: for beginners, maximum 2 to 3 trades simultaneously. More than that and your attention gets divided. Write these answers down. They are your risk management rules. They do not change based on how confident you feel about a trade. Element 5. Your exit plan. Most traders spend all their time thinking about when to enter. Almost no time thinking about when to exit. This is backwards. Your exit plan has 2 parts. Part 1. Your take profit. Where will you close the trade if it goes in your favor? Set this at a key resistance level, a price where sellers have historically stepped in. Do not move it higher because of greed after the trade is open. Part 2. Your stop loss. Where will you close the trade if it goes against you? Set this before you enter. Do not move it lower because of hope after the trade is losing. Enter with a plan. Exit with the same plan. Emotion has no place in your exit decisions. Let me tell you about Amora. Amora is a 29-year-old nurse from Canada. She works long shifts. She does not have hours to watch charts every day. When she first started trading, she tried to follow every signal group she could find. She was constantly checking her phone between patients. Anxious. Distracted. Losing money. Then she built her strategy. Swing trading only. Bitcoin and Ethereum only. 4-hour chart. 3 specific entry conditions. 1 to 2% risk per trade. Stop loss always set before entry. Take profit always at the next resistance level. She checks her charts once in the morning before her shift. Once in the evening after. 20 minutes total per day. She is not a full-time trader. She does not want to be. But her account has grown consistently for 8 months. Because her strategy fits her life. Not someone else's. That is what a personal strategy does. It makes trading sustainable, realistic, and actually enjoyable. Right. Here is your strategy template. Write these down right now. Section 1. My trading style. Am I scalping, swing trading, or position trading? Section 2. My markets. Which coins am I trading? Bitcoin only? Bitcoin and Ethereum? Section 3. My time frame. Which chart time frame am I using as my primary reference? Section 4. My entry criteria. What 3 conditions must be present before I place any trade? Section 5. My risk rules. How much am I risking per trade? Where is my stop loss? What is my minimum reward to risk ratio? How many trades maximum at one time? Section 6. My exit plan. Where is my take profit? Where is my stop loss? What are my rules for managing the trade once it is open? Section 7. My trading schedule. When am I checking charts? How much time per day am I committing to trading? Fill in every section. Review it weekly. Adjust based on what you learn from your trades. This is your living document. It grows with you. Inside the Gentle Crypto VIP circle, I share my personal daily trade setups based on exactly this kind of structured approach. Every signal comes with entry, stop loss, take profit, and the reasoning behind it. So you can see a real strategy being applied in real market conditions every single day. One-time payment of $19.99. Lifetime access forever. Link is in the description. Lock in your access today before the price changes. Every complete trading strategy has 5 elements. Trading style. Market and time frame. Entry criteria. Risk management rules. Exit plan. Your strategy must fit your life, your schedule, your risk tolerance, your goals. Copy nobody else's system. Build your own. Start simple. Stay consistent. Review and improve weekly. And treat your strategy document as the most important trading tool you own. Because it is. In the final video of Level 3, we wrap everything up with a full quiz and summary. Your chance to test everything you have learned across this entire level. And I have a very special message for everyone who makes it to the end. Subscribe right now so you do not miss it. Drop a comment below. What trading style are you going to start with? Scalping, swing trading, or position trading? Tell me below. And if you have already started building your strategy, tell me what your entry criteria looks like. I read every comment. See you in the final class of Level 3.